Hello, Oracles. Welcome back to our Tuesday Night Live. Tonight we have on Nick Gibbs from Investing Against the Grain. And my goodness, lately we have been doing a lot of investing against the grain. Nick, how have you been?
Man, I've been great. Life's good. But
Yes.
stock market aside, yeah, I think everything's been pretty good.
Excellent, excellent. Yeah, it's funny on Twitter right before we got on here, somebody was talking about how, they want to learn more about like all of us in the community. And something I'd
hmm
wanted to do previously as well is like, there's so much, and you and I have talked about it before, it's like there's so much more to us than just Tesla. And so, part of tonight is we're going to dive into a little more of, the macro environment, and maybe in the future we'll get into it an episode that, hey, we're not even going to talk about the market or Tesla and just enjoy each other and learn about the people in the community. That'd be awesome too.
Yeah,
So
absolutely.
today we're up over 7%. I didn't even see where we finished. Like 132. Holy moly. Finally broke that
We
123 resistance. How you feeling about that?
yeah, we closed at 131.49 and we're up in the aftermarkets a little bit. So yeah,
Nice.
no, nice move. I'm sure this has a lot to do with the Hertz news, the China delivery numbers.
Yeah.
A lot of stuff that people want to hear and see to know that the worst possible scenarios weren't being played out.
Yeah, I think when we saw the China numbers this morning, and for those of you guys who missed it, looks like the insured numbers were just over 12,000, which comparing year over to year, that's huge because January is usually not that big. So obviously, this is a sign that the price cuts are working. So that's a big signal there. Um, so how do you feel about? And you and I haven't spoken since the beginning of the year. How do you feel about the production and delivery numbers for Q4?
Oh, I think I mean just to be candid, they were pretty disappointing. They were I I mean it is what it is, right? I mean, we
Yeah,
all were expecting. I think you and I had similar numbers, maybe like around 430, maybe even
yeah,
higher for production. Yeah, it was a bad numbers. It it didn't meet what they guided for. I know everybody always talks about, well, they guide for 50% year over year over a multi-year horizon. Yes, they did say that. But Zach also said, he also gave a guidance very specific for this one. He wasn't talking
yeah.
about multi-year. So they missed their own guidance, in my opinion. They missed Wall Street's, they missed the bear of Wall Street's, they missed the bull of Wall Street. So they missed it,
Yeah.
and proof in the pudding that they agree they missed it are these price cuts.
Exactly. And I looked at it, I was like, yes, 40% year over year growth, amazing, outstanding. So there's
Yeah.
nothing to shy away from that. But when they're giving us specific numbers themselves and they don't achieve those numbers, that in itself is disappointing. So
Yeah,
it happens. But you know
exactly.
what? Though we're growing, and maybe these price cuts are going to be that move that we all been looking for. And so now, to go and dive into the macro, because what are your feelings over this past year? We've had so many discussions about, is it the Twitter drama that brought the stock price down? Is it the macro environment? Is it Elon's tweets? All sorts of stuff. What are your feelings on what happened last year? What was it mostly that brought the stock price down?
Yeah, well, I mean, all right. I think let me talk about my feelings first. So, my feelings
Yes.
first is pretty much, reminiscent. Wow, sorry, it's been a long day for me. Of the same thing that probably a lot of you feel. This was for me the biggest destruction of my net worth that I've ever experienced by far. Now, luckily for me, and everyone has their own situation, but I'm good. I'm solid. My investments are really inconsequential to me as far as day to day life. Luckily, I didn't just do what I was thinking about doing, which was retiring last year. Luckily, I didn't do that. So I'm happy I didn't do that. But for me, how I'm feeling is everything's good no matter what. As long as I got my wife, air in my lungs, food on the table, this roof over my head, and I can go to sleep at night, everything's good. So it sucks. We're all there. We're all dealing with it, and that's how I feel. That it sucks, but it's part of the journey. And the only reason that I would really or I would feel bad for anybody in this whole last year would be if you walk away from this experience and you didn't learn anything. Like this,
True.
I think has been, I mean, especially for us in the Tesla community, I think it's been such a education for all of us. I mean, I don't know about you guys, but I was not this well versed in CPI and PPI and PCE and what the Fed looks at, the trend. I mean, like it's forced me to deep dive into all these things that, frankly, I never really cared too much about. But
Yeah.
now it's important. So yeah. So I know I haven't answered your question yet, but I don't know if you want to say anything to that before I actually answer your
Well,
question.
yeah, I mean, like I feel the same way, and to me, I was so deep into the Tesla verse that you forget that there's something a stronger force outside of the Tesla verse that can really affect things. And again, it learned a lot. This is the first time in Tesla's publicly traded history that we've had an extended true bear market like this. We've never gone through a recession like this. We had the little dip in 2018. We had the COVID crash, but nothing like this in the
Yeah.
history of Tesla. So everybody who is a Tesla investor is now learning what this is like as a Tesla investor.
Hopefully. Yeah,
Yeah,
hopefully.
yes, hopefully we are all learning.
Yeah. But as far as like this whole decline, right? Like what led to it? There was no one thing. Like to anyone who thinks that there was one silver bullet, it's just not the case. Right? It's the same reason why Tesla rose to the top. It wasn't one silver thing that sent it on this bull run. There's a lot of things that you know stacked up over time. And with Tesla, the story could only last so long against the macro. But then, things just start happening, right? The Fed pivoted towards saying that, okay, this isn't transitory. We need to raise rates. And that's how the year started, right? That was the big kibosh from JP to Jerome Powell. And then what happens 1 month later when we think, okay, maybe like the market's settling down, boom, Russia invades Ukraine. Man, that sent things, actually, that was actually a positive day in the market, right? Because
Yes.
lead up to that, it was the will they, won't they, will they, won't they, will they, won't they, and the market hated that. And
Yeah,
then
the
they
un
did.
the uncertainty is what the
Yeah.
market hates, and I remember somebody had posted a chart right around there, maybe it was Chicken Genius had showed historically when there is a war that's going on, the day the war is announced or official or whatever it is, the stock market actually rallies because that's where you
Yeah.
get the clarity. Okay, are we going to war or not? That causes uncertainty. That causes the market to go red. Yes, we are going to war. We have an answer. Cool. We'll go green now. It's very confusing, but yes, that's how it worked.
Yeah, exactly. And that's, I mean, like, I'm not going to sit here and list all the black swan events that happened
There's
over
a
the
lot.
course of 2022, but I mean, they were crazy amounts, right? Absolutely crazy amounts. And no matter what happened, no matter what good news came out, and damn it, if there weren't more good news in 2022 for Tesla than there has ever been, in my opinion, there's been bigger news in previous years, but I think 2022 had the most amount of good news, right? I mean, anywhere from investment grade to two new factories to prototyping of Optimus to the progression of FSD to the stock split. I mean, like you go on and on. The margins, the results, the sheer dominance. I mean, it goes on and on. Twitter was a bullish catalyst at one point, right?
Yeah.
like
At
like
one point it
it's
was.
crazy. Yeah, it's crazy to
Yeah.
think. And so
Yeah. I mean, seriously, when you look at it, 2022 was probably the biggest fundamental growth year for the
yeah,
company. I mean, it's insane what happened, but because there was so much other stuff going on, totally overshadowed.
yeah, completely. And that's where, I'm not the only one to say this. A lot of people say this. I'm sure you said this on your channel before, but the stock is completely disconnected from the fundamentals and the actual story of Tesla. But at the same time, I don't think that's the only reason. I don't think it's just, you can't look at it as like the macros affecting Tesla and that's the only reason. Tesla is also has also shown signs of cracking on their fundamentals. And I don't think this is even debatable at this point. I mean, I've gotten some swings thrown at me for saying such words, and I will reiterate: I am a Tesla bull over the long term. I'm
Oh
just
yes,
not a
I meant to start this whole thing off with whatever we go over today. Nick and I are both very big bulls for Tesla. By the way, just a reminder. So whatever we talk about today, Has nothing to do with us being bearish. We're big bulls. Go ahead.
Yeah, exactly. And my comments are, I like to think, just rooted in an attempt to be pragmatic and not just, you know, and we all were to some extent just open-eyed, thinking like, oh, this is never going to go down. This is it. Like, this is the low. I mean, I think we all drank that Kool-Aid. Anyone who didn't, I call BS on that. That, like, we all thought that, but yeah. So, but yeah, speaking of the cracks with Tesla, like the cracks you saw were that number. What was that number? The Q4 number, right? That shows that not. And I think you have to like take into context. Tesla did, or potentially does, we don't really know yet. I don't think enough time has gone by. Did or does have a demand issue, and it's not a demand issue as in nobody wants to buy the cars. The issue is that the price of the cars are too high for the majority of people now.
Yeah.
Right. Like
yeah,
the people who
for
could afford
where the
those.
economy's at, the price. Yeah. For where the economy at, the price was too high. That's all.
Exactly. And the big reason for that is because rates are so much higher for a car loan, right? Like, this is just, it's not rocket science, right? You buy a house, you tend to get a mortgage. You buy a car, you tend to get a loan, right? If for no other reason, it doesn't make sense to tie up your cash in something that just sits in your garage. Doesn't make a whole lot of sense. And so as rates go up, well, now that car becomes more expensive and something's got to give. Either the consumer has to say, yep, I'll pay more. The rates have to come down, or the auto company has to lower their prices. But something has to give. Someone has to budge. Tesla budged, right?
Yeah.
Jerome Powell,
of course, the
has been unmovable.
The hand was forced a little bit from the EV tax credit, but the IRS played their card, and Elon just said, "Well, pound sand, here you go, have at it."
Yeah, but that was just in the States, right? It wasn't forced in Europe. It wasn't.
Yeah, it was in
Europe.
Europe.
China.
So the EV, and that was the crazy thing too. And so I thought about it. China, the prices came down. We saw that, and obviously, I think part of that had to do with the fact that their credit had gone away at the end of last year. So what they had for their credits that they had were gone. So Tesla had to kind of compensate for that and bring the prices down. Here in the US, obviously the EV tax credit, throwing all these wonky numbers that were out there. And like then the EU kind of surprised me, but thinking about it at the same time, if you're going to drop the prices everywhere else, the EU is just going to be like, well, we're not going to buy either until you drop our prices. Yeah. And it just made sense to do it all at once.
Yeah, exactly. And the reason I also caution as far as like we'll see if they still have this issue. I don't think we've quite really had enough time to go by to know that this has become like the last price cut of all cuts, or cut to end all cuts, or I saw someone say something like that. The last price cuts to end all price cuts. And it's like, I wouldn't be too sure about that. Right?
Yeah,
like
I'm looking at the prices where they came down. Unless the IRS changes their criteria in March, I have a feeling we're going to see probably a little more trimming. I don't think it's going to be a lot, but I would imagine they're going to bring the Model Y long range down so that all accessories will qualify. I would imagine the performance is going to come down, and so it would qualify as well. Just a little trimming, but I think this quarter Tesla dropped the prices as they did to see how demand is going to be, see how things are going to go, and then see what the IRS does in March, and then they'll adjust accordingly after that.
Yeah, but that again, that like to take the focus off the United States, that's just for the United States.
True.
Right. So Tesla also has to be able to deliver everything they make out of Shanghai. And as Giga Berlin ramps up more and more, well, those deliveries need to go somewhere else because Germany's ramping up. Right. So yeah, I guess all I'm saying is be optimistic, but be very cautiously optimistic, because if there's another price cut, you don't want to be caught blindsided by that. And it's absolutely possible. I would say it's more likely there's another price cut than there is not.
Yeah.
Right. So yeah.
And I've heard both sides, because some people are arguing that if the IRS goes up on the criteria and they make the 5-seat Model Y $80,000, Tesla may go up on prices again. So I don't know if that's actually going to happen, because as you mentioned with the EU, that has nothing to do with China or the US. So what would they do with pricing in the EU? Would they come up on that as well? But if they're not selling them over there, there's a lot of different things at play. And I think this year is going to be a big year of just kind of waiting to see how things play out. Obviously Tesla's, I think, still going to be extremely, well off after this. Who knows what's going to happen at legacy auto and all of that going through all of this. But yeah, it's something to pay attention to. I mean, I think there's going to be a great year for consumers for both buying a Tesla and buying the stock. That's my personal feeling. So anybody who's got cash flow coming in and a giant stockpile of cash, you're going to have a heck of a year buying.
Yeah. I would definitely. So I've been thinking about this a lot when I have time. I feel like this was a big price cut.
Oh,
Right.
yeah.
I mean, I think it had more to do. There was more rationale behind it besides just meeting the IRA requirements, in my opinion.
Okay.
I think a big reason for these price cuts, and again, I'm not trying to be Mr. Doom and Gloom over here, but I think it's because Tesla or Elon, they see real signs of weakness in the market, and they are trying to make sure that they have their prices at a point where hopefully they don't have to just keep cutting, because the optics of that just look bad after a while,
Right.
right? You don't want to keep, all right, we cut 2,000 and we got extra 50,000 orders. All right, well, now we have the same issue. We're going back up on inventory. All right, we'll cut another 2,000. Just make a good cut that can hopefully stand the test of time of the rest of this bear market, and then we can go from there. So I almost think it's strategic. I know a lot of people talk about it being strategic to essentially go on the offensive against the OEMs. But I feel like it's more so going offensive against the potential recession, depression that Elon seems to be hinting at.
Yeah, I'd agree to that. And I know you had made a tweet the other day talking about the banks because, bank earnings, just all these little signs that we're getting from all different areas, just kind of pointing to this recession. And I know Elon has been very vocal about thinking that we could be getting into a deep recession like we saw for the housing market crisis. Now we're hearing more people saying it may be a mild recession or something shallow. From everything that you've been looking at and researching, what do you see that we could potentially be seeing for a recession?
Yeah. So frankly, I don't see anything obvious right now for a recession, to be completely honest. I don't see, GDP seems to be growing, if anything. I was at the mall a few days ago. I haven't been in the mall in years. And so maybe that's part of it, right? That I haven't been so long. But my mind was blown by how many people were there, how much spending was happening, and not just hey, there's a lot of volume in this mall, how long the lines were. I went to I walked by Zara, and Zara, right? This is a clothing store. If you're not familiar with it, it's a clothing store. I would say it's maybe slightly better than a H&M, right? Just to give you an example. So we're not talking about a Louis Vuitton store that everybody wants to go in with a line wrapped out the window. We're not talking about an Apple store that always has crowds. We're talking about a clothing store. And this clothing store had a line for the cashier to check out that was going out of the building. That was insane to me. That does not spell of a recession to me.
Yeah, especially in January after the holidays.
Exactly. Yeah, exactly. Now,
maybe they were all returning.
Well, I would have thought you would have been returning by then, right? I mean, we're midway through January. Who knows? Maybe you're right. Yeah, maybe they are just returning. I don't know. But then I started thinking, okay, I started looking around. I was just wondering, well, not wondering. I was talking about wife. I was looking around just saying, how many people can actually afford to be here right now? How many, and this isn't me trying to sound high and mighty compared to all these people, right? I mean, I was there too, spending, right? I needed to get a new sweater for a trip I'm going on, right? I like sweaters. I'm channeling my inner my Chamath Kutherpali or Kutherpali. Yes. Wow.
Polyhapatia? Yeah.
Polyhapatia. Thank you. Yeah.
It's a mouthful.
Yeah. Anyways, yeah, I said Kutherpali. I was thinking of Big Bang Theory.
Yes.
But yeah, so I was there too. But I was just sitting there talking to my wife, just looking around at people and judging, sure, but we all judge. And I'm just thinking, can they afford to be here? Should they be spending? Or is everything I'm looking around the biggest possible signal that there could possibly be for a recession? And it's that these people are all out in the midst of this bear market, and they apparently don't care. They have their spending habits. They haven't changed their spending habits. And they're saying, you know what? Here's the credit card. Keep putting on the credit card. Let's build this up. Let's build this up. Let's build this up. And they're going to be in a world of hurt.
Yeah, and
I
that's one
don't
of
know, but I wonder about it.
that's one of the things that too that I've been monitoring is the credit. And they've been talking about homeowner credit lines going up and debt going up for a lot of people in their households. So household debt going up, that's, I don't know if it's just one of those where people, need to buy things, and because things are much more expensive, that's what's causing the debt to go up, or if it's people who are just okay with spending because they are confident they're going to be able to pay this off in the long run. I don't know. It could be potential non-education about interest rates. Even looking at credit card rates, I've heard from some friends that some of their credit cards are going up to 30% for interest. And that's nuts. Like, from my experience, 24 was like super high, and now I'm hearing about 30% rates. Like, yeah, and like you said, with vehicles themselves, back in March when I was looking to get my Tesla, the rate was 3.99%. Now, when I looked at it most recently, it was 5.99. Somebody told me, I saw today, somebody had mentioned how the rates came down for interest on the loan for Tesla. I've got to get into mine because mine somehow is still on hold. Don't know. Thank you, Tesla, for keeping it on hold. But I've got to go into that and check to see what the rates are now, because that'd be a good indication of if the rates came down for the loans as well for Tesla, that might help with the pricing. But still, when you're paying 6% on a $55,000 vehicle, that's a lot of money in the long run, especially if you're paying it over 6 years. Like, that's a
Yeah.
good chunk that you're paying extra that you really wouldn't have to in a normal market.
Yeah, well, and that's the other thing. Like something's got to give, right? At some point, something's got to give. I'm sure you see Teslas everywhere. I mean, you're in Connecticut, so you must see Teslas everywhere. I see
Yeah,
Teslas everywhere I live, right? I mean, they're everywhere. They're proliferating, which is great. But again, just going back to the economy, I see Teslas everywhere. I see the malls jam packed, right? Lines out the store. Yet again, we see the reports savings are, I think, at a low since like 2019. Credit card debt is at extreme highs. I know car loans are at extreme highs. But now it's normal apparently to have a $1,000 plus car payment, which is insane to me. So
yeah,
something has to give here. Something is not making sense in all of this to me. And
right.
again, maybe I'm wrong. Maybe there's some very obvious thing that I don't see. But again, as far as you asked me, like, what signs are you seeing? I don't see any signs like in the numbers or anything like that, other than what CPI says. And yeah, that's pretty much it, because GDP looks good. People are spending essentially. GDP essentially says people are buying and spending, and people are making things, and they're buying them. So I don't know. It's just nothing smells right, nothing looks right, nothing feels right. And then I have Elon saying what he's saying. You hear Jamie Dimon saying, okay, well, now it's going to be in Q4 that we have the recession. I see Jerome Powell, who he's not an idiot, even though I don't think rates should still be going up, but he obviously, him, and not just him, because every time they vote on rates, it's been unanimous. So
Yeah,
they all are clearly seeing something else. So who's wrong? Is it all these people, or is it us who have lost all this wealth?
yeah. I don't know. And Ross Gerber says it all the time. He's like, I'm out shopping. It's busy as hell. Like, people are out spending money, so it's hard to see that we could be possibly in a recession and having negative GDP. So, I mean, unless the hammer's about to fall, like I said, maybe we're in this weird spending bubble right now, and that's like the last piece that needs to fall. But like, we're looking at the housing market is still insane. Like, I've been trying to buy a house, and just recently I've finally seen some price reductions, but like, there's still junk on the market. There's nothing good to buy in the housing market right now. So that still needs to come down. Who knows what we're going to
Yeah,
see with, if sales come down for retailers, and then we're going to see, negative earnings, maybe that's what's going to cause some of this. I don't know if there's one last panic that we're about to go through. I still feel like we're going to get one more pullback and drop. I know today was awesome in the market. Loved seeing Tesla up over 7%, but like, just feeling in my gut, seeing what we still have to go through, I think the next 2 quarters could still be questionable when it comes to earnings. And we still have, the rates may still go up again on February 1st. You got
Yeah.
PPI coming out tomorrow. I love how you mentioned I think it was like October, November. You tweeted out how like we missed one of the CPI or PPI, and you're like, but you have to remember we're still trending down. We're going in the right direction. And that was so important to hear because we're still trending down. So tomorrow we're looking at a potential 6.8%, again, still trending down.
Yeah. So I want to take a step back real quick on what you mentioned, like housing, right? So I I also am on the market. Well, in the market, I've been in the market for a few years now to find. I mean, I live here. I love this house I live in, but we want to do another build, and this new build will take the lessons from building this house, and ideally, this is like the family house, right? So we're on the market, and this won't be a cheap house. So we want to make sure that it's the right place. We know the location actually.
So
The
are
main
you
thing
going
is
to,
a lot.
you guys are building from scratch then?
Yeah, ideally, yeah.
Nice. Awesome.
But yeah, so there's like these areas that I watch constantly, and to your point, they did drop prices initially. They all did. All of them dropped maybe like anywhere from $10,000 to $50,000. All right. But since maybe, I don't know, we're in January, I would say since maybe November, I haven't seen a single price cut. Not a
Really?
single one for anything there. And nothing's moving. It's all staying there. It's all just staying. So now it's like this. So going back to Jerome Powell, right? Because people keep saying, oh, well, the current housing stuff, like he doesn't see it because it doesn't make the numbers yet. But I'm using this as like my litmus test is these couple neighborhoods. And I don't know, the prices aren't dropping, people aren't buying. It's like this, like the people who own the houses are holding out saying, no, we know what this was worth. We're not giving it up. You guys might have been forced to give it up in the stock market. You had no choice. I have a choice on what I sell at. And fair enough on that. But there's got to be someone that gives, either the buyer gives or the seller gives. And it doesn't seem like the sellers are budging at all yet. So I agree with you that eventually they're going to have to give, especially as we go up to 5% in rates. So that's something that is worth thinking about. At least my little microcosm of an example. So I don't know. I'm curious. What are you seeing? Are you seeing prices drop continuously?
No, and it's weird. So I've definitely seen it probably around the same time frame, probably November time. There's a little bit of a surge. Like I was all of a sudden getting these notifications more and more popping up on the market, and especially in markets that were completely dry. Like all of a sudden I would get like in this location that was more ideal. I'm like, oh wow, something's actually available there. So that popped up. Recently, it really hasn't been too much. Mostly price drops. Nothing really new on the market. So it does kind of feel like it's all holding its breath right now. Like we're just waiting for which way we're going to go. Are we going to go into a more of a seller's market or a buyer's market? And I know I've been hearing a lot of people talking about the banks, rates continuing to go up, us going into potential foreclosures. This is obviously what we saw during the housing crisis. But what we learned over the last 2 years was the housing crisis was created because there were a lot of loans that were put out that people shouldn't have gotten the loans in the first place.
Yeah.
This time around, the loans that were given out on the houses were solid to like very good people with very good finances. So we may not see that unless it's a situation where, renters can't come through. Like if we start seeing a lot of layoffs and unemployment start to go up, that might be the trigger, because now we have people who can't pay rent. Now all of a sudden landlords are like, well, we're not getting rent coming in. We can't afford these houses anymore. We have to dump them. If we can't sell them, we're going to have to foreclose, and the banks are taking them. So that might be the last trigger. So whether it's going to be the Fed raising rates this last time or just the extended high rates for the rest of the year. What are your thoughts on a Fed pivot? I know some thoughts recently were, they might pivot this year. Originally, I thought it was going to be like Q2 of next year. Do you have any thoughts on that?
Yeah, it's funny actually. I made a video about this on Monday, and coincidentally enough, Meet Kevin made a video using the exact same chart. I don't know if that's a coincidence or not,
Oh, he
But
steals your stuff too, huh? That jerk.
I'm not saying he steals anything,
No, I
but
know.
it was an interesting coincidence. I'm like, come on, man. But it's fine. Like it was interesting to see his perspective because he kind
Well,
of pushed back against it.
what I like about
Go
stuff
ahead.
like that is that tells me that I'm on the right path. Because I mean,
Yeah,
say
exactly.
what you want about the guy, he's obviously very smart and he knows what he's talking about. So if I'm thinking the same way, that tells me I'm on the right path.
Yeah, yeah. No, I'm a fan. I'm a
Yeah,
subscriber of his on
yeah, me
YouTube.
too.
But yeah. No. Anyways, jokes aside. Yeah. So as far as the Fed pivot, I don't I don't think they're going to pivot as soon as everybody thinks they are. I think it's been you know how they say like don't bet against Elon or you know yeah, so that old adage. I feel like it's been a losing bet to think that Jerome Powell will blink. He hasn't.
Right.
He's been steadfast.
Seriously,
He's
this dude right
stone
here.
cold. Yeah. He's he's not budging.
No.
They've said what they're going to get to. They're saying 5 to 5.25.
Yeah.
They're going to get there. I would be
Yeah.
shocked if they don't get there.
Yeah. The only thing that I can see is they're gonna go up at least 25 basis points. I was guessing 50. With inflation and CPI where it's at, we'll see where PPI comes in at tomorrow. But maybe they only go with a 25. But like, despite the fact that his tone has changed every once in a while when he comes out, his words have been all the same. He's like,
Yeah.
we're going up on the rates. We're going to go up on them until we hit 5%. We're going to hold these rates for a while. And then in 2024, we're going to start coming down. That hasn't
Yeah.
changed.
Yeah. And so I do think they'll do 25 basis points, so a quarter of a percent. And the reason I think that is because now they've done the volume of rate hikes. Now they can afford to go slower, right? They still have their target, but they're not in a rush anymore. So
Yeah.
it doesn't make a lot of sense to keep going aggressively. I don't think so, unless they're just trying to get over with sooner than later. But by going 25 basis points, you allow time for everything you've done to have an effect, and you buy yourself time is what you're doing.
Right.
But the reason I don't like trust, for example, moves like we just saw today is because one, I don't think Jerome Powell's going to pivot, right? So there's that. But then we got a number coming out tomorrow, which hey, maybe it's a good number, and the market rallies. If the market rallies, I don't think it'll last long. I think Tesla earnings will send Tesla stock down, not because I'm being bearish, but because they had bad deliveries and because tell me the last time Tesla stock went up after earnings.
Yeah.
It hasn't been
God,
2022, tell you that.
Tesla smashed all their numbers. Okay,
Yeah.
who cares? Sell it off like every single time.
You know how many times I'm sitting there listening to earnings calls, I'm like, oh my God, this is amazing. I look at my phone, I'm like, after hours, like, what? Down $15? How? Like,
I know.
it doesn't make sense. So again, I'm not betting that anything's going to change on that front. But yeah, so you got the number tomorrow, which could be bad, could be good. Who knows? You got earnings. I think earnings will be bad on their own. And I think Elon's rhetoric is not going to be great. I think what we heard on the Twitter Spaces will be more or less verbatim what he says on the call.
Yeah.
Maybe some people whisper in his ear, say, hey, man, you got to chill out. But I don't think he has any more margin loans or anything. So he's got nothing to lose other than to be honest. And, it's almost better if he does that, to be honest, because the lower the expectations are for Tesla, the better it is for the next earnings.
Right.
So there's that. And then right after that, you have Jerome Powell, the Fed hike. They will hike at minimum 25 basis point. And if the market has been rallying, expect Jerome Powell to intentionally crush the market with his words.
Well, and we've got tech earnings coming out they start start Thursday with Netflix. So you've got Netflix earnings, all of tech earnings going next week. I mean, yes, this has been nice, but I think about last year, we had a nice rally the first 2 weeks of January. And then that's right after that, we just fell straight downhill from there. And again, I don't think we're going to run into that this year. I don't think we're going to have a straight downhill this year like we saw last year, because once the rates are as high as they're going to go, I would imagine if they go 25 on February 1st, maybe another 25 in March, depending on how inflation looks. So I think they're going to go up 50 basis points regardless. It's going to be either 50 now or 25 now and 25 in March, depending on how inflation looks. And either way, though, we still have to go up on rates. Every time they've gone up on rates, whether it's been the day of the hike or somewhere there afterwards, we came down in the market. It's just how it's moved. It's just how we've been doing it. And people aren't even talking now about the fact that the Fed is still pulling money out of the market. I mean, they're still running off their balance sheet. Like, that's something that nobody even talks about anymore. So
yeah, that's a great point. And you talk about, again, when you see all these people spending money and everything, like it's, look, money is being destroyed is what's happening.
yeah,
right? Like, we are taking money out of the system aggressively. So yeah, it's a great point as well. But yeah, so I just see there's so many things to kind of send the market down in for the rest of the month, I would say. And even to the early parts of February. And as far as Tesla goes itself, again, like, I'm bullish on Tesla long term. I'm bullish on Tesla over the next 2 years. But look, we have to deal with these disappointing deliveries we had and the numbers that shows, which people might anticipate lower revenue. They might anticipate lower gap and non-gap, but I don't think people are going to anticipate the lower gross margins that will come about this, because don't forget, they were cutting prices a lot in China.
yeah.
And then once we deal with that, it's not over yet, because now we have these new price cuts for all these vehicles that are being sold that we'll see for Q1 earnings. And what are the margins can be on that? I know a lot of people are sitting there trying to like do math on, well, with mega packs, it can make this up and that. And then people are doing other math trying to figure out, well, Tesla said that they're lowering prices to what they think the cost of vehicles will be in the future. And so maybe through manufacturing methods and lithium prices dropping, that all that will be a wash. I don't buy that. Maybe some of that will start to trickle in for the Q1 earnings, but I believe what they're saying. But what they're saying, I think, will be down the road, not for Q1. And
Agreed.
Wall Street only cares, about quarterly earnings. They look at 12 months at a time. They don't look into the future. So yeah. So again, I'm not trying to be negative here. I'm just trying to paint a picture that this rally, the 7% move we had today, doesn't mean that $101.42 was the bottom.
Yeah.
It may have been, but I'm just saying it might not be the bottom.
Yeah. And Harry here, bad deliveries. They had the highest delivery numbers in their history. Yeah, earlier we were discussing. Yes, we agree that the numbers were great as far as growth goes, but based upon what Tesla had given us for their own projections, even from the Q3 earnings, that was the miss. And one thing, and Gary Black says it all the time, and this is what he gets a lot of backlash for, is, he tries to relate what Wall Street is thinking to what we think. Us in the Tesla community, we think that this is great. We overlook all of this. We say, we're looking past this. It doesn't matter. But when it comes to Wall Street, it matters a lot. And unfortunately, they're the ones who are dictating truly where the market is going to be going. So they see deliveries were down, most likely because of that. Anybody who has a valuation model, the first thing you do is put in, how many deliveries do you have? You multiply that by average selling price. Because of the fact that average selling price came down because of all the price cuts they did in Q4, you work out the math that way. Sure, there's a bunch of variables in there. So truly, when it comes to the earnings, what we're going to end up looking at is, all right, well, where are the gross margins? Where are the operating margins? Sure, maybe the vehicle margins came down, but did they make up for it, with expenses in other areas that they cut to be able to make sure that the bottom line was even better? So it'll truly come down to EPS. But again, I made a video about it recently, going back to your point about expectations. It's probably a good thing. This is a great year for the economy and for Tesla to kind of reset expectations for the year. That's what they excelled at before was, nobody believed what Tesla could do. And they always came out and smashed the expectations. Then analysts, people like Troy Tesla, came out and they were so accurate with their numbers. Analysts were just like, all right, we're just going to go with Troy's numbers. And now their expectations were a lot more accurate. And they believed that Tesla could do this. Now we're going to get into a position where maybe Tesla can't do it. And now Tesla's going to start smashing those numbers again. So, and again, to your point with the mega packs and stuff, I think we'll see that kind of stuff come in Q3 and Q4 of this year. Probably
Agreed.
won't hit hard. Yeah.
Yeah, yeah, and just to double click on that comment about record deliveries. Look, in a vacuum, we can be excited about that, but okay, so bad deliveries. They had the highest delivery numbers in their history. So let me ask you, like, and again, I'm not just trying to be like a smart aleck. I don't want to cuss on your channel, but what if they delivered record deliveries by one car? Would that be great because it was a record delivery number? No, of course not. So, yes, record deliveries, but in context with what's been said, what Tesla said, what the analysts were expecting, what Troy was expecting, right? All that in context, like you have to be able to say when something was bad, and that was bad. And again, you have to believe that Tesla believed that was bad because they made these massive price cuts. So Tesla acknowledges it's bad. Wall Street acknowledges bad. Troy does. The market does. We as investors need to make sure that we can acknowledge when something is bad with Tesla. Because if you
Yeah.
can't, well then you're only looking at things through a glass half full. That's it. Right? You're not taking everything else into context. So that's the only thing I'm saying. Look, I agree with you. In a bigger picture, 40% year over year, like that's insane in this market with what's going on. Yeah, like that's phenomenal. Compare them to other OEMs. That's amazing. Don't forget that China was shut down. Shanghai was shut down for a month and a half. Like, yeah, like I get the story. Like you're preaching to the wrong choir here, right? I get it, but I also get the bigger picture. And the bigger picture is why we see the stock down as much as it is.
Right. Yeah. And that really comes down to it is, everything is down. And honestly, from a real good bull standpoint, and this is one of the things that really confuses me in the community is everybody who is kind of up in arms about what's going on with the stock price is so frustrated, but they're all long-term bulls. I'm like, if you're really long-term bulls, this should be awesome for you because now you
Yeah.
can buy this stock that's so disconnected from its fundamentals that this is amazing. So it really boggles my mind that people are thinking the way they are. I
Yeah.
don't know.
Let me address a couple things I'm seeing in the chat here, if you
Oh
don't
yeah.
mind.
Yeah.
Uh,
Yeah.
I'm not short on Tesla. I've actually never been short on any company ever. I it's I don't like to invest for companies to do bad. Like it's not in my DNA. Like it's just I think that's kind of gross to be honest. To bet on
Yeah.
companies losing. Like I'd rather not do that. I have between my wife and I, we have all of our shares in Tesla. Tesla is our only investment outside of real estate and cash. And I've been stockpiling cash since November because I've been sick of putting it into Tesla just to see, well, I could have gotten 4 more shares had I just waited. So I kind of say, you know what, until I'm convinced that the market is changing, I'm just going to keep piling up cash because I've got more than enough shares to hit my my number. I want to be where I would say I'm actually ready to retire this time rather than last time. So yeah. So I don't have anything. The only thing I even have with options was I sold some put contracts at $100, and so if you're not familiar with options, that's actually a bullish trade, right? So essentially what happens is I get paid for selling those put contracts. So I sold that put contract to somebody who is shorting Tesla. I sold it to them. They paid me money. And if Tesla goes to 100 or below, then I have to buy Tesla stock at those prices. And so I have price triggers right now set up for all the way down, uh, you know, based on the cash I have. And so my logic was, well, I'll sell these puts. And if we don't go back down to, I'm like at 100, at 90, at 80, 70, at 60, I have all these things sold. So if we hit those numbers, great, I'm buying. If we don't, well, I keep all the money from those shorts and they lose out. So that's it, right? So everything I have is a bullish position with Tesla.
Yeah, and that's actually one of the things when I do get into options that for me, because I would put in limit buys. So I'd say, hey, I like Tesla at $100. I want to buy it there. And selling a put is really no different, except you're getting paid to do that, and you have
Yep.
to buy 100 shares for a contract. For those of you who aren't familiar with options, so you do that, and it makes so much sense because you're like, oh, I want to buy it. The only downside to selling a put is if the stock never hits that level and runs up, you don't have the shares. But as Nick said, he has all the shares that he wants anyway, so this is just like a bonus on top of it. So it makes a
Exactly.
lot of
Exactly.
sense.
Yeah. Yeah.
Let's
So
see.
so yeah. So like right now, I mean, if everything like triggered, if we sold off tomorrow, right, and we got all the way down to $60 a share, I would be buying over 2,000 shares,
And then you'd be
right? So,
retiring a lot sooner than you thought.
well, well, I don't know because
Okay,
we went
maybe a
down to
little bit after.
60. Everything just got cut in half on top of that.
That's true.
Right?
That's true. So you got to wait a little bit.
Yeah. So yeah, definitely
That
all
that
about
was
the long term.
Oh yeah. So and that was one of my thoughts too, is like, because I thought about the whole retirement thing, and for me, I'm sure it's same as you. Like retirement isn't retirement. You're just going to do more of what you want to do versus what you have to do. And and so for me, I thought the same thing. I was going to do it now. Obviously, the economy doesn't favor that. I'm like, but thinking about how the economy is right now, it actually gives people who aren't specifically retiring now, gives the people who wanted to retire, let's say in 5 years, if they were wise with their money like you were, maybe they can retire in 2 or 3 years versus five. Because if they really take advantage of what's going to happen potentially this year in the market, whether it be, housing investing, stock market investing, investing in Tesla, whatever it is, if the market rebounds as it kind of seems like it is going into 2024, 2025, investments you make now might do extremely well and allow people to have an earlier retirement than they originally planned.
Oh yeah, no, absolutely. Yeah, it's yeah. I mean, my conundrum is I talk about retirement.
But I know you
I'm
like your job too.
I have like that fear for first of all. Like, I've talked to Farzad about it. Like I'm like I don't know how you made that jump, man. Like that's a
Yeah.
ballsy jump to do it. Like even if the numbers all check out, it's like you know, it's more
Yeah.
than that, right? It's like you had this thing, it was good, it was guaranteed income coming in every single month, and to just not have that and just living off your assets and yeah, that
Yeah,
it
it's a
again,
leap of
I
faith
almost
for
did it
sure.
last year, or not last year, I guess technically 2021. I almost did it in October of 2021 for my 30th birthday is when I was going to do it. Um and I decided not to just because I got greedy and I wanted more Tesla share. So yeah.
I mean, it happens to the best of us, but hey, you're still young too, so there's nothing wrong with that at all. A few more years, and you like your job, so there's nothing
Oh
that
yeah,
stops you from that.
that's the other thing. I love my job. I mean, I work crazy hours. For those of you who don't know, well, I have a different background, but by degree, I'm a mechanical electrical engineer. Turned into a software systems engineer. So, but I love what I do. I love my team, who I work with. I work for one of the greatest companies in the world, in my opinion. So yeah, I love what I do. I don't know if I could leave it just because of that, and the happiness it brings me, and the camaraderie and the team I have. So yeah, so that's a whole another element. But yeah, so
Yeah. And
all
that's
about the long
and
term.
obviously we're all in different situations. Farzad was working for Tesla. Obviously that's phenomenal, but high stress. So,
No.
sometimes you just crack under that. And it seems to me like, people who are there, it's like a 4 year thing. I don't know. People just do 4 year stints at Tesla and they're like, all right, I'm good. I'm tapping out. I got a buddy who actually he works for Apple. Pretty significant role he has with Apple, and it took him a while to go there, but he went there, and Tesla's been heavily recruiting him, and
Mhm.
he's like, Apple works at an insane pace. He goes, but when you're looking at Tesla, they work at like a pace that's 4 times as fast as Apple. And he's like, that's bonkers to think about, knowing what they do over at Apple. So just to show you guys what the pace of innovation is for Tesla versus even some of the best tech companies out there, they're moving fast.
Yeah, yeah, I can attest that working at a tech company and the crazy yeah it's the pace expectations are high, especially nowadays. And just to go back to the macro, we've talked about we've talked about how, like, what's that ball to drop, right? And I think you alluded to it when we talked about housing, right? Like, there's no real thing that I don't think anyone's seen as a systemic issue. Maybe people's debt, maybe card debt, maybe credit card debt. Sure, that could be part of it. But what happens if we see these layoffs accelerate? Like we've seen in the tech industry, right? And I think for the most part, tech companies hopefully will be done with layoffs, the ones that have done them. But then we start seeing it into the banking sector. So, and it's just starting the banking sector, right? We went through what 2 to 3 months of layoffs in tech, and we didn't see them anywhere else. Now we're seeing it in banking. So what's that go? Maybe 2 or 3 months. What happens after from there, right? So so the question is, all right. So if people start getting laid off and their houses dropped in value, but now they don't have jobs, but the mortgage is still really expensive from when they bought, but the value's less. They can't just sell it. I mean, right? This is where that that conundrum
Yeah.
can happen, right? And there's no buyers out there because everyone's like, "Oh crap, look what's happening," right? It can be self fulfilling. So this is where it could actually happen. You don't have to have a dot-com boom or a bubble. You don't have to have a 2008 2009 financial crisis, giving mortgages out to people's cats. It can just happen like this organically.
Yeah, and it becomes a domino effect. Like all of a sudden, one thing happens. Like I said, you get these layoffs. You said the banks are doing the layoffs. We can go into retail. I was working at Home Depot when we went through the housing crisis. There were layoffs, and then there was the hiring freeze for 2 years. I was supposed to get promoted, but because they were flushing out a lot of the managers, they moved managers into the manager role that I was going to get. So they just shifted bodies around, so they kept the good ones. And this is really it. And I had mentioned it the other day about how the market for the last, I'd say, year and a half has been an employees market where employees can go out there and do whatever they want because employers are so desperate for help. That I think is the last piece that the Fed is trying to straighten out is they do love the fact that they have, maximum employment, but you can't have the labor force to the point where employees are controlling employers. The capitalism doesn't grow very well that way. So yes, it sucks for employees, but when you've got employees who may not be as skilled enough for a job or maybe wouldn't have earned that job in a normal market, and now they're getting paid high dollars, it kind of needs to flush itself out. And I think that's going to be the last domino that falls. And again, we're starting to see that with the layoffs. And then we'll start to see that domino effect happen over the next, I think, probably couple of months, 6 months or so, and we'll see that. But it's something that's good. It's something that's going to be necessary to clean up the market. It's just going to suck to go through. I mean, and I know
Yeah.
you work out, so it's very similar to working out. It sucks in the moment, but when you're done with it, it's good for you.
Yeah, no, exactly. But I will say, just to be a little more constructive, I do think, you mentioned Megapack and starting to see some of that in Q3, Q4.
Yeah.
I think Q3 will be, and again, we may this today might be the beginning of us recovering, and maybe we did bottom. Like, who knows? I'm not saying that can't be the case, but I think Q3 earnings will be, I hope, that moment where it's like, okay, the worst is hopefully definitely behind us, is what I'm hoping for. Um, and my so I guess this all depends if there's like a big recession or not, if Elon's right about that or not. But my thinking is right now we have to deal with the bad deliveries from Q4. And Q1, we're going to have to deal with the bad margins that we're going to see from everything with the vehicles. Q2 earnings, maybe like we're in a recession, maybe we're not. Do that for 2 quarters, Q2, Q3. So by the time we're seeing Q3 earnings, Q4 earnings, hopefully we're out of all of this. Maybe, but who knows? I mean, like it's so hard to predict this. It's so hard to tell. The only thing I can say is if you don't have the shares that you want to have or what you need to have, dollar cost averaging right now makes a lot of sense. If you have what you need to have, staying in cash can make a lot of sense for you. Especially, if you're like me, where you're just saying, hey, if it goes lower, cool, I'll buy. If not, until then, I'll just collect premium and you can pay me that way. So yeah, so there's many ways to take advantage of it. But the big thing that I would stress for everybody right now is, even if you think Elon's wrong, even if you think Jerome Powell's going to cave, even if you think all this stuff, even if you think that you can't get laid off, that you can't be the one, I promise you, it can be you. I promise you, things can get worse. And I would just make sure, like, and I'm not someone who believes in like a emergency fund, if you will. I really don't believe in it personally, but make sure that you have access to capital in case something does happen. Just be prepared, especially if you have a family. If you're a single individual, YOLO, who, whatever.
Oh yeah.
But
And here, as
yeah,
Raymond says, don't go into margin. That's still a no bueno on margin right there.
yeah,
My recommend, and now not financial advice, but when it comes to margin, until the Fed definitely pivots and we go into what we could see as a bull market, margin is very dangerous. You got to be careful with margin. I mean, anytime you have to be careful with margin, but if there was ever going to be a safer time to go into margin, it would be during what we would see as a bull market. And realistically, with the bottom, we're not going to know we hit the bottom until 6 months after we hit the bottom. That's just the
yeah.
reality of it.
Well, so what do you think is going to happen, Tim? Like, do you think that we've bottomed? I mean, I know I've seen some of your videos where you talk about all the gaps and stuff, right? I think you have a low
Yeah.
59 potentially, but besides like that, right? The wizardry of charting and all that. I mean, I do it too, right? But I don't. It's not like my calling card or anything like that. But I think it'd be foolish not to notice trends and patterns. But
Yeah.
what's your gut on? Do you think we bottomed? Do you think we didn't? Do you think there's more pain? I know you talk about flush out, but like, what's a flush mean? Does a flush mean back down to 100, or does a flush mean to 59? Like,
So
what's Tim's take?
I was so torn because I had 3 levels. I had 57 where that gap is down there.
Can I
I
pause you real
had
quick? That
Yeah,
was that needs to be a segment. Tim's take. That's got good alliteration.
I
All right,
like
here we
that.
go. Next minute. Tim's take. Go ahead.
Tim's take. So I thought 57 was going to be the bottom because we had a gap down there. That was a worst case scenario bottom. That was if CPI missed, PPI missed, tech earnings crashed, FOMC that went up 50 basis points. That was like a worst case scenario. I think that's almost off the table now, but it's still in the back of my head. $80 was kind of a realistic bottom where numbers were going to come in as normal. Fed went up on rates 50 basis points. Tech earnings weren't terrible, but definitely not great. Tesla's earnings, again, as we spoke about, just kind of expected for what we saw for deliveries. So the market's going to be like, all right, well, here are your earnings. You didn't blow us away with EPS. Good numbers, but not what we wanted. So the stock market's going to sell off on it. That would be $80. Now, with us hitting that 101 bottom and following the charts, I love the run today. And we do have a gap that was formed today at 122 and another gap that's down to 114. I have a feeling we're going to fill those gaps, but that 101 level, I think, to me is going to be an indication of we may go down and test 100 again. So maybe it's the tech earnings, the FOMC, that's going to end up pulling us down to test 100 again. At that point there, that's our second test. We would normally get a third test. If we tested the third time and bounce off of it, I can almost guarantee that 100 is the bottom. If we hit it the third time and fall down below that, then I'm going to be eyeballing that $80 level. So, all your levels that you have for your puts, that'll kind of, maybe you'll hit some of those if that ends up happening. But I'm one of those where it's like sort of like Tesla. I referenced it before. Tesla prepared for this situation as well as you possibly could. No debt,
Yeah.
ton of cash, plenty of cash flow coming in. If you've got that going on for yourself, that gives you the agility. So you don't need to be able to predict the future. And as Mark had mentioned here himself, it's like nobody knows what the future is going to bring. You have no idea. Nobody knows. But if you are ready to handle whatever is going to happen, it gives you a better opportunity to take your emotions out of it and just handle what's given to you. If the market's going to give you $80 to buy the stock at, take it. If you think that your return on your investment at $80 is worth it, you take it. If you think right now 130, I'm still a believer of, the stock price when it was under 1,000 before the split. I'm a firm believer that was still a good price. If you're holding on to it for 10 years, I have a strong feeling we're going to get back to that level within the next 10 years. So you're going to be profitable at some point. It's just a matter of how long you want to hold it for. And Mark over here
Yeah.
always tells me, don't jinx it. So like it's hilarious because ever since I started my channel, it was like literally when I made my split video, that was like the peak of the market. And I had a viral video and then just straight down from there. I've called every single gap on the way down. They've all been filled. I called every level on the way down. So it's like, sorry, folks, but I'm sure we would have hit them either way.
Yeah. Yeah. And not to throw fuel to the flame there, but we are now red and after hours.
Oh boy.
Up
Oh my
wait,
goodness.
now we're up. Now we're up. We're good.
Okay. Okay.
um, so what is it that you think will actually, I don't know, I guess spur the growth in the stock price? Like, do you think it'll
Investor Day.
be
I can
Investor Day?
almost
Oh, okay.
guarantee. So for
Wait, Investor
me,
Day or March 1st?
March 1st. Well, March 1st is Investor Day. So
Oh,
that
yeah, okay, yeah. Shareholder meeting.
so,
Gotcha. Yeah,
so
I got it.
that's Investor Day, and then the share. So I was talking
Shareholder
to
meeting's
Alexandra
after.
last week, and Investor Day is March 1st, and then we've got the
Yes,
shareholder meeting on May, I think 15th is what she said.
correct.
So it's going to be one of those 2 days. March 1st, I don't know, and you can give me your take on it. Do you think that's going to be a day where Wall Street's actually going to understand what's going on? We know that like Battery Day, AI Day, they don't get it. They don't look that far ahead. Like you said, they look out 12 months. They don't care. Oh, Optimus in 5, 10 years. Yeah, who gives a crap? They don't care about that. But this here, they're talking about their long-term roadmap. They're going to show the Gen 3 platform. Do you think that's going to be something that Wall Street might actually have their eyes open to?
So, I mean, let's answer your question first. Have they ever?
You're not wrong.
Ever?
No,
Like once? Did they for AI Day? Did they do it for AI Day 2? Did they do it for Battery Day? Did they do it for the Cybertruck? Did they do it for anything? Like, no,
no.
they haven't. So I wouldn't expect anything. If anything, I would expect it to be a disappointment for them. I I'm not convinced that they're going to show the Gen 3 platform on
Okay.
March 1st. I think they will talk about it. I don't think they'll show it. And the reason I don't think they'll show it is because I think it'll first be built in China. I think it'll be built in China. It'll be designed by Giga Shanghai, and it'll be unveiled, in my opinion, in China. I think that would be. Yeah, I think that'd be the right thing to do in many ways, and I think Elon understands the culture and perception over there very well, and so that's what I think the Gen 3 announcement, like actual showing, unveiling will happen there. I think during March 1st, I see March 1st, and again, like I don't know anything, right? I'm just guessing,
All
right? So
speculation.
yeah, so don't take what I'm saying for any truth by any means. In fact, ignore everything I'm saying. But I take March 1st as the unveiling of Master Plan Part 3.
Yep.
Because that's what it sounded like to me. Like everything they said sounded like Master Plan Part 3. So
Oh yeah.
part of Master Plan Part 3 is the Gen 3 platform. So I think they'll probably talk about how, we aim to build, robo taxis and a lower a more volume, lower cost platform that will be half the cost, take half the time to build, right? I think they'll say stuff like that. But I'd be surprised if they actually have an unveil, especially with everything else they're talking about, right? They're talking about how we're going to allocate capital. And I don't remember what else was on there, but I think they talked about like 3 or 4 different things that they'll talk about. Well, did we see that the Cybertruck? No. Did we see that with any of the vehicle unveilings? No. So why would this be an unveiling? It doesn't seem to
True.
fit to me. But
Yeah, and if the
times can
Gen 3
change.
platform is going to be for the compact car, then it would make sense. And I was talking to Farzad about it too, about how seeing as how when they did the price cuts in China, like they announced the rumor came out about it and sales just fell off a cliff because over there they wanted to wait. So I'm like, if you're going to unveil a car that's going to be $10,000 to $15,000 less than the Model 3 that they have right now, you can't just say, hey, in 3 months we're going to come out with it, because guess what's going to happen for those 3 months? Your sales are going to suck. And so I think it's going to be like you said, maybe they don't unveil it, but it could be one of those, hey, they're going to announce it and say, by the way, this is going live in 2 weeks or whatever it's going to be. It's going to be, I think, a short window between and when that happens.
I 100% agree. And maybe again, this is all probably wrong, but that's my hope. My hope is that they take a page out of Apple's book, and mind you, a phone's so much easier to produce than a vehicle. Like there's not even a question about that. But taking a page out of Apple's book by saying, "Here's the next vehicle. Here's the unveiling," and could you imagine what the stock market would do if they said, "Oh yeah, and deliveries start tomorrow"?
Oh yeah. Oh my God.
Like
talk about, you would, if you didn't buy that day, you just missed out on $50 to $100 in a stock price.
It's like seriously, like that's the type of thing that the stock could go up 50% in a day.
Right.
Like circuit breakers would trip. Like it'd be insane. Like,
oh yeah,
car manufacturers don't do that.
And that's why my thought about March 1st, and I think maybe it comes down to however they present it. If they come out with the Gen 3 platform and say, this is what it's going to be for, and we're going to be unveiling the vehicles with it next year, maybe we get some movement out of it. But like you said, if they only talk about it and don't really unveil anything, then they're like, all right, there's much more talk, more fluff, don't care. And then, the stock will sell off. And again, we have to see that maybe we get a run up into it, because we always get the, buy the rumor, sell the news situation with all of these. So we'll see what happens. But, so I think it's either going to be then, or, Alexandra had pointed out the shareholder meeting, looking at all the drama with the board of directors and Elon and Kimball and unfollowing and unfollowing, all that mess that's going on. So it may be the shareholder meeting that we actually see the turn. But I think the turn is actually going to be coming between March.
The turn. Gotcha.
Yeah, it'll be coming between the March and May. Between March and May, we'll see that turn. I don't think the stock price will go down any lower after the shareholder meeting than whatever the bottom is. And again, if we wait 6 months, so if we look at probably, Q2 earnings that we're going to get in July. So at that point there, we'll be able to look back and say, all right, this was the bottom. I think that's what's going to happen. Wherever that bottom is going to be, I think at Q2 earnings, we'll be able to look back and know we had already hit the bottom, and then we'll go up from there.
Yeah. Yeah. No, I agree with that. What do you so do you think they'll actually unveil the Gen 3 platform on March 1st?
I thought they were going to. I mean, I would love to see it. Maybe
what made you think that?
Maybe it's the way they worded it. I have to go through and see what they said on it again to see how they explained it. But I thought in the way they had explained it, it just sounded like whether they actually unveil it or at least show it maybe in just a drawing. So maybe it's not even a prototype built. Something to, instead of just talking about it, showing it. Because, is the Gen 3 platform going to be for the Robotaxi and Cybertruck? Is it going to be something that they can, almost like a form factor like with the iPhone? You've got your standard and then you've got your Pro. Is it something like that where they just have a couple of different form factors where they can, my thought is they're literally going to be making cars like you see, like Matchbox cars. You've got your whole base and this is your platform. And then bloop, you just put your top on for whatever style you want. And that's my thought is what they're going to have for that structural battery pack. And that's what the Gen 3 platform is going to be. So I thought they were going to unveil, at least explaining what that is, maybe in a drawing or something.
Yeah. So I gave you the link. I don't know if you can share things on here or not, but I sent you the link for the press release. If not, it's fine. I know that's like stressful when you're like in a live stream. You got comments over here. You got the person you're talking to trying to pull something up. It's like, all right, a lot going on here. But
it's not even. You said
it's fine.
You know what? Oh no, I got it
in
here.
The comments.
Yep, I got you. I got to do it on the other screen. I can make it happen. Keep on talking. I'll make this happen.
Okay. Yeah. So, I'll touch on the Matchbox things first. So it's funny. I think it was on Farzad's live stream, maybe. Yeah, I think it was Farzad because right when Sawyer tweeted out about the new Idra 9-ton going to China, and it was funny because we're sitting there saying like, maybe that's for the Robotaxi, the Gen 3 platform, and it'll be a single piece and all that. I don't think it's going to be. First of all, there's a really good chance that 9-ton gigapress is not for Tesla.
I thought
A
it was
lot
going to
of
be for
the
BYD.
it could, yeah, it very well could be. It could be for Neo. It could be for XPeng. It could be for any number of different companies. But a lot of the newer companies are looking at gigapresses for their production as well. So, but let's assume it is for Tesla. I find it's so it's hard to say this into easy words. So if you've ever taken like a materials in, well, anyone who's listening on this call, if you've ever taken like a materials engineering course, essentially talking about metals and flow and things like tension, shear, all that stuff, but essentially what they have to do in order to pump in the molten metal and to fill in all the nooks and crannies, all the crevices, and the angles and the molds you'd have to have, and it just seems highly unlikely, especially in the speed it has to go, because it has to be in milliseconds. Because you have to remember, when it comes out, it's not water cooled, right? Water cooled's like, well, you're in construction, like when you weld anything, right? Normally, when you stick weld something, after you're done stick welding it, you drop it in water, right? Like no big
Yeah.
deal. But with very thin metal, and the bigger the sheet of metal gets, and the more complicated it gets, if you cool it, it's gonna, we call it potato chipping, right? So it goes from like the form to like, right?
Oh
Like
yeah.
that's what happens. Yeah. So to avoid that, that's the gigapresses shoot everything in milliseconds. And to think that you can shoot everything in at that large of a dimension, and not just that, but again, to be able to have all the like nooks and crannies for being able to hang different things on that the car is going to need, from the rails to where the motor sits to the house. I mean, like it goes on and on. There's so many things. I just, that would be extremely impressive, and I find it hard to believe that they have already figured out how they're going to do that, and it's already so far ahead of time that they're shipping it to Tesla already. And it's, I don't know. If anyone could do it, it'd be Tesla for sure. But it seems like hopium to me at the moment.
Yeah, and the way I took it as well, and like if you start looking into Idra and what they've been working on and talking about things like they have a lot of Chinese manufacturers who hit them up for gigapresses. So we know that there's more than one automotive manufacturer over there who wants these. Now you can go ahead and assume that because Tesla jumped on them first, they may have 2 years worth of back orders. But if somebody jumped in there, we also heard that Tesla was looking at another supplier for the gigapress as well. So maybe Idra's helping somebody else. Tesla's using this as a backup. We don't know for sure, but
Yeah.
somebody else in my comments had pointed out the fact that it wasn't even painted Tesla's colors. And then they
Yeah.
talked about it.
But hold on real quick.
Yeah,
So, all right, so you work you deal with like a lot of dangerous equipment, right?
yeah.
What color do you normally paint anything that's an emergency stop? Or what color do you paint anything that might be moving objects that's a pinch point? Red, right?
Yeah.
Everything that's painted on the gigapresses, or the hydraulic moving parts, are painted red. So I get what you're saying, and it could be just Tesla colors, and that is for Tesla. I'm just saying, like that's not exactly a signal that it's for Tesla, just because the moving hydraulic part of the gigapress is red.
Oh, yeah, well, they were talking about how it wasn't painted Tesla's colors. So because it didn't have, because like if you look at the gigapress down in Austin, it looks like it's for Tesla. The one that
Mm,
they saw coming out for going over to China didn't look like it was for Tesla. So that's why we're under the impression that it's going to be for
gotcha.
someone else.
So yeah, so
Um,
what I saw was it was white, and then the actual rams for the hydraulics, or the rams that the hydraulics actuate, those, that was all painted red. So that's what I saw.
oh,
Um,
okay.
but yeah, fair enough then. If you guys saw something that was different color,
Yeah.
I just saw that
And
one tweet that one day.
yeah, and then people who thought it was going to go to Indonesia, I was like, I would love that. But you have to remember too that if they end up choosing Indonesia, they still have at least a year before that whole entire factory gets built. So they're not going to have this gigapress sitting there for a year before
Yeah.
they even put it in.
Yeah, exactly.
All right, so let's take a look here. So let me see. We plan to host Tesla's 2023 Investor Day on March 1st. The event will be live streamed from our Gigafactory in Texas with the option for some of our institutional and retail investors to attend in person. Our investors will be able to see our most advanced production line as well as discuss long-term expansion plans. There you go, master plan part 3. That's what I figured there as well. Generation 3 platform. Okay, so let me see. So that's what it was. So our investors will be able to see our most advanced production line, and I took that as they can see the Generation 3 platform as well. That's how I read it.
Yeah, but then they say as well. So as well
discussed.
means
Gotcha.
separate from that, we will discuss
long-term
expansion plans, discuss Generation 3 platform, discuss capital allocation, and discuss other subjects with our leadership team.
Very good pick up there. Yes.
Yeah. So again, like I think, and this is why to me this reads and the most advanced production line, all that, like they did that at Cyber Rodeo, they did that at the shareholder meeting. This back in, I don't remember what it was, but at the shareholder meeting they did that, and it was all right. Like it wasn't anything like too special, to be honest. Like at the shareholder meeting, we didn't even get to see the 4680 line, so that was kind of disappointing. But so I think that's par for the course. Like, hey, here's a tour of the factory, etc. But I think it's going to be more about discussing these things more than anything.
Oh, yeah.
And does that not sound just like a master plan? That's exactly what it sounds like.
It does. It so does. And to your point, usually Elon already tells us these things ahead of time. Just like what we're going to hear on the Q4 earnings call. It's probably going to be basically what we heard on the Twitter Spaces. Maybe a couple of new things. What do you think about Tom Chu? You think he's going to be announced here? Do you think he's going to be announced at the Investor Day, Q4 earnings, shareholder meeting?
Oh, that's a good question. All right. I think official. Well, I don't know. I think Elon will accidentally let it slip during the earnings call. I feel like sometimes he says things that he doesn't just mean to say.
Yeah, how many times do you think he gets kicked under the table by somebody? Like, shut your mouth, you can't say that.
Yeah, or people just look at each other like, I guess we're talking about that now.
Yes.
Like
to me, that's one of the reasons I love having Elon on there, because you never know what's actually going to come out of his mouth.
Yeah, exactly. And the best about Elon is he says the same things over and over and over, like verbatim almost. Yeah. So the second he deviates from that, it's like, what'd you say? What was that?
Yeah.
You haven't said that before.
Yep.
So I agree. But I could see him mentioning something about Tom Zhu. If nothing else, I mean, analysts are going to ask. Our say.com questions, I guarantee that will be one of the top ones.
Gary Black will be in there. Who's coming in for the Twitter CEO? Who's coming in for this role for Tom?
Yeah. No, it's at the shareholder meeting. That was Gary Black's one question was who's your successor? So I wonder if that will be how the question is asked. Like, is Tom Zhu your successor? Something happens, and but I don't know when he'll be announced officially or anything like that, or maybe there is no announcement, right? Maybe just like how often do they actually? Yeah, exactly. How often do they actually announce?
That's true.
Did they? When did they announce?
Other than board members, I don't think they've announced anybody who's taken on a new role. Like, has anybody come in to take Andre's position?
Well, yeah, I guess technically it's Oh God!
I know. I see his face.
Yes, technically someone has backfilled Andre. I don't know how actually how to say his name. Kripathi.
Yes, Andre. I just call him Andre. So that's what I've heard.
But yeah, I don't know. They might not say anything about it, right? But here's my thing. Now to like push back against myself, right? This is like the constant battle in my head.
That's how you grow.
If March 1st was really nothing special, if it was just the unveiling of Master Plan Part 3 because you want to give the shareholders a guidance, a preview of what's to come, why not just wait till the shareholder meeting for that? Like, what's the point of having this extra event? Unless the whole point of this is to get ahead of any proxy votes or anything to come during the shareholder meeting. So we're doing this to mitigate any potential consequences in a couple months. That could be
It's
it
totally
too.
possible.
I
Yeah.
don't know.
I mean,
It's definitely curious.
I mean, as we look back and always see, and obviously Elon and Tesla, they make mistakes. They're not perfect by any means, but they usually have a long-term plan and think about pretty much everything that come along the way and anticipate that. One of the reasons why they're in the financial position they're in to be able to handle this because they anticipated it, so they were ready for it. So kind of like everything else, they're just ready for whatever's going to happen. So maybe they're like, all right, well, we're going to do this, but we can anticipate this happening along the way. So we're going to put investor day here to mitigate some of this down the road because that could be what, their bottleneck that could be
Mhm.
coming. So they're going to try to do that. It's totally possible. And of course, Tesla Q would spin it as, a smoke and mirrors game to hide things. But quite honestly, I think it's just the way they operate. So I think you might be right. Maybe they're anticipating something going on at the shareholder meeting, and who knows when they're going to announce buybacks. I have a feeling they will,
Yeah.
but maybe that happens at
So,
the shareholder meeting as well.
well,
Oh, a shock.
kind of
Yes, thank you.
a shock. Yes, a shock. Oh, Swami. Yes, thank you, thank you. Glad somebody has a good memory here. Um, w- Speaking of them, have you had a chance to experience FSD yet?
Yes, one of my friends has it, and ironically, my son just got his driver's permit a couple of weeks ago. So I literally like had to drive an FSD, and he has 1069. I can't remember whatever the latest one is. So he's got that. We got to drive in that, and then 2 days later, I had my son drive my car. So I threw it out to Elon. I was like, dude, now we're going to compete. Can I train my kid faster than you can train FSD? And so yes, I've driven in it, and phenomenal. Like I gotta say, because I drove it the last time I did it was probably 6 months ago. So it's nice to see a good progression after 6 months. Major improvements. We did the same route. The only problem we had was something I had actually heard from somebody on Twitter was going into a roundabout. If there is another car coming around, it gets really confused, and we ran into that exact situation. We turned around, went back through it. Not as many cars in there, and it handled it much better the second time. But it's
Mhm.
definitely a challenge. But the improvements were significantly better over the last 6 months. So I'm really looking forward to version 11 when it comes out in 2 to 38 weeks.
Yeah, yeah, great. Well, what happened at the roundabout?
So what happens is when the car was coming around, we pulled up to it. It recognized the car that was coming around where we needed to go in, but it didn't want to stop. Like it seemed like maybe it would have, but we weren't going to risk it. It just didn't seem like the car was going to stop. So we ended up we intervened, stopped the car, and then as we got into the roundabout, he clicked it back on again. And then coming into the roundabout from another angle, there was a car that kind of pushed too far in. So we hesitated because we were trying to let that car go when it shouldn't have gone. So those were
Mm,
the two issues within the roundabout that it ran into. Um, and that was it.
gotcha.
Again, when we went back into the second time, we had at the exact same spot another car coming in, but it was further back behind the line, had no problems going around it. So it was really just where that car was placed in the moment through the roundabout.
Okay, gotcha. Yeah, I haven't had any issues with roundabout, so that's it. That's interesting to hear. What are your thoughts overall with FSD though? I mean, besides it's great. Do you think we will be at robotaxi ability, or not even that? Do you think we'll be at humans don't have to actually pay attention anytime soon? Do you have a time frame or a sense of what you think that'll be?
I still put that around 2025, 2026. And I've got a whole theory as to what's going on with Twitter and FSD, but I think it's going to be around then. I think we're going to see massive improvements this year on it. And I think we're going to see a much bigger jump in the next year than we saw over the last year. And we saw a big jump this past year. So I don't know if we're going to get to that point, but I think we will get to the point where the end of this year, it will be safer than a human driver. But whether it's going to be where you don't have to pay attention to the road, I think it's maybe going to be another 2 years or so before we get to that point.
Okay, okay.
And now I'm assuming you do have it in your Tesla now.
So I don't actually have a Tesla, but I have
Oh, okay,
access to one that I use
gotcha.
frequently. Um, yeah, yeah, that's people ask me all the time, like, "Oh, why don't you have a Tesla?" It's like, well, because I've had a paid off car and
That's
I'm investing against the grain over here. Like I can't be
I
a
know.
bad disciple of my own message here. Like,
That's where I'm so torn right now. Is like I wanted to get one and I can go get one right now. Not that I can't afford it, but like I don't have a place to charge at home and I would rather put my money into the stock right now, honestly.
well,
Like
yeah, well that
this to me is like people who look back who bought a Model S in 2012 and they're like, had I put that money into the stock, I could have bought 10 Model S's now without a problem and still have plenty of money left over. Of course, if people did that and nobody bought the car, the stock price wouldn't have gone anywhere. But that's just kind of my thought right now is if I put the money into the stock now, I'll have way more money to buy a vehicle later. I could pay for my Cybertruck later with it.
yeah, that's kind of like my always battle with anything that I already have this pay. I mean, aside from like mortgages, I don't have any debt. So for me, it's like to buy another car to have potentially a car note because again, I'm not gonna voluntarily lock up cash capital like that. So to have a car note when I could literally be buying, like say even if your car note was only $200 a month, that's 2 shares of Tesla I could buy every month. You
Yeah.
know, like
Oh, exactly.
that's
And that's what I look at too. And I'm like, and like you said, I don't have a car payment right now, and I don't need a
no,
car. So financial wisdom tells me don't buy it.
yeah,
And if
but,
we
but
do end up seeing price cuts coming later this year again, I can get it for less later.
yeah,
Now, of course, nothing's
seriously.
guaranteed, but looking at, the writing on the wall, there's a good chance that it's going to come down again.
Yeah, so here's the actual exercise I tend to go through because trust me, I'm always on the Tesla website building out my vehicle.
Oh
Now
yeah,
I do have a
all the
Cybertruck
time.
on reservation, so once that's ready, I don't care. I'm taking delivery of that one. But my exercise always is like let's just say that your car note would be $500 a month. Okay, so let's say Tesla stock price is just at $100 a share, just for easy numbers. That's 5 shares you could be buying every single month. All right. So that's 5 shares at $500 that you're giving up. Let's say let's say you only do that for 1 month. All right. So 5 shares, $500. What do you think Tesla's going to be at in 10 years from now? Right? Like, do you think Tesla will get to 1,500? Do you think it'll get to $1,000? Well, factor that into your numbers. And that's how much you're actually paying on that car payment every single month. It's not just today and what you could buy Tesla today, but it's all those future gains you're going to miss out on as well. And so for me, it's like when I
Right.
start thinking of it like that, it's like, how can I possibly go and purchase a car when I don't need one right now? Like
Oh, I
it's,
know. I mean, let's say it 10x's in 10 years, that's $5,000 on that $500, and that's $4,500 in profit for each month that you are paying for this in the next 10 years. And
yeah.
if you get a 6-year car loan, I mean, obviously the stock price is going to go up from then, but it's yeah,
But still, like if it's 1 year like that,
right.
1 year, right? That's almost 50, $60,000 that
That
you're
and it
paying
that
that you're
that
giving
is
up.
another Model Y. Again, that's a
Yeah.
Model Y. So,
Yeah. Eh, so yeah, I struggle with that. Luckily, I have access to a Model Y with FSD. If you've ever seen my videos, it's the same one I'm always using.
oh, okay.
But
So what's
but
your
yeah,
experience been then? So and I know as an engineer, you can see it a lot different than I can just from a passenger standpoint. So
yeah,
what have you
I
seen
don't
in the growth on it?
yeah I don't know if I see it differently. I just think in general, like whatever your background is, whatever your you know whatever
Just
kind of
analyze it
way
differently.
yeah, exactly, whatever you've been like geared to through your education, society, etc., to look at things. I think that's where the real difference is because I don't know what they're doing underneath the covers, right? I don't know what type of models they're using. I don't know, what biases they put on what neural nets or what what new C++ compiler they have. Like, I don't know any of that, right? I have no way of knowing any of that. But what I can see is extraordinary progress. Like here where I live in this part of Florida, and again, I'll caveat that this is completely a micro perspective, very biased based on my geo. But where I live, it works flawlessly here. Like the only issues are really getting into the right parking lots at times, right? Like I'll do a test to go to Chipotle, which is like, where the majority of my money goes is Chipotle. If it doesn't go to Tesla anymore, because now I just stockpile cash, so all my money goes to Chipotle now. And but whenever I'll go to Chipotle, it'll get me there, no problem. It has to negotiate median, has to hang out in the median before I can take a left and everything, right? It's a very complicated little area, but the GPS has Chipotle still out on the street, not in the parking lot. So like those are the issues that I run into,
Yeah.
right? It's just that. It's like, all right, how are you going to get it so the robotaxi takes you to the front door, right?
Yes.
Because that's what I want.
Oh yeah.
But so other than that, like I don't really have any issues with it. I mean, occasionally you have like it thinks it sees something it didn't see, and so maybe you get a little hard stop because it looked like someone's gonna cross, it didn't. But it's shocking for me because I wasn't expecting that. But in reality, I would have probably acted the same way if I was actually driving and my passenger would have felt that. So
Right.
I think a lot of that about that. But no,
That's
it's
true. I never even thought about that because with FSD driving, you really are now reacting like a passenger versus a
yeah.
driver because you don't have the control. That's a great point.
Yeah. So in reality, like I try to always think like, what if this was an Uber? And every time I get into any Ubers, I always think like, all right, what is this experience like? Like, is this a great flawless drive? Like, if I was gonna sit here and just critique this drive, would I be saying things worse than or better or worse than I would with FSD beta? And over, I find myself realizing that FSD beta is better. Like, I'm not saying it's there ready to go, but it's better. On 99% of all the drives, it is better than most humans in my experience. But that's in my area. I live in Florida. We have great weather. We have, frankly, way better marketing on streets than any other state in the country. And there's probably a lot to do with our great weather. But so that all plays into it. But no, I mean, like just thinking about where it was at the beginning of 2022. Remember, beginning of 2022, you heard absolutely not a single person talk about zero disengagement drives. No one.
Oh yeah.
And then in January, like towards the end of January, I think Omar was like the first one talking about zero disengagement drives. Now it is like just a regular thing for
True.
people to have zero disengagement drives, like absolutely regular. So if we made that type of progress in 1 year and we're at where we are right now, I can't even imagine where we're going to be at the end of this year. I'm convinced that this year, like it'll be solved where humans don't actually have to pay attention.
Oh,
Like
you think it's gonna
I'm
happen this year?
oh,
Okay.
I am it seems so obvious right now. It
My
seems
God, because when
beyond
that moment
obvious.
happens, I mean, we talked about before with the stock price just skyrocketing on the announcement of, tomorrow Gen 3 compact cars coming out. The moment they announce FSD is like that, my gosh, that is
Mm.
going to have the same reaction.
I don't think so actually. I
But,
can
that's
easily
true because regulation.
well, I can see it taking like years before people realize, right? Like
True. Okay,
like
that's
did you
true.
did you know that when the iPhone came out, it took 4 years before the stock actually reacted to the iPhone?
So from my research on that, it was more about that was when the App Store was created versus the actual iPhone itself. So I think that
Yeah.
was the takeoff. But yeah, I mean, obviously Apple grew nicely, but I mean, you're right though. It took a
But
while.
yeah, but I think the big thing is like people tend to not really understand I mean, people still don't understand the technology right now, right? Like
Yeah,
they
my
don't
construction workers are
realize.
coming still using flip phones. Yes.
Yeah. Exactly. Exactly. So yeah, so I can see it easily taking time for the technology to catch on and it become very popular with the public. I can also see it taking time, to your point, from a regulatory perspective, and it'll happen in different spots. I think the rollout will be exactly how it happened with the Uber. Right? Like
Oh
I don't
yeah.
know if you remember, like Uber was like, "Oh no, we don't have Uber here. Oh, do you have Uber? No, we don't have Uber here."
Oh yeah, yeah.
And then it became like where certain cities would have it, other cities wouldn't have it. And then slowly it became kind of like the people demanded the ability to have Uber. And
Oh
then
yeah.
Uber and Lyft just kind of took off. And now you can get Uber, Lyft everywhere.
Yeah. And that
Right.
was like that was my thought too with like Waymo and Cruise. I'm like anybody who's a Super Bowl and they're going to bash them, I'm like, honestly, those there are probably laying the groundwork for
Yes.
regulations in the future because
Paving the
people are
way.
going to see that. And as from the public standpoint, they're going to be familiar with it. They're going to be more comfortable of, hey, I've now gotten into a car that has no driver. And now that more people are seeing this as a regular thing, when Tesla starts doing it on all of the open roads, it's not going to be so strange to everyone as it is. And
Yeah.
with regulations, so I think with Twitter, having Twitter out there showing more of the truth as to what's going on, and going to your point about how, in with Uber and Lyft and people are demanding that it's there, when we start seeing the stats on how safe full self-driving is, people are going to start demanding that they have it. And that's what's going to probably end up forcing the hand of regulations.
Yeah. No, I could absolutely see that. I mean, in reality, full self driving plus human is safer than human without full self driving. Like, I don't even
Yeah.
think that shouldn't even be up for debate. Like, that's unequivocal in my opinion. Like,
Yeah.
it's better. It makes you not be on your phone. It forces you to pay attention. I mean, just that alone, right?
Oh
Like,
yeah.
that alone should almost be required in every car, period.
Oh yeah. Well,
Right?
honestly, so with my kid, I had to do his first driving class with him, and they told all the parents when your child is driving, you can't be on your phone. You have to be paying attention at all times. It's literally like FSD. And so when we talk about disengagements, I was literally driving with him, and every time I had to like correct him, I'm like, oh, there's one intervention. Oh, there's another intervention because I'm like, oh, you're getting too close to the curb. So that was my whole thought. So it's almost identical to the whole entire same situation with FSD.
Except if your son made a big mistake, you can't just easily take over.
Correct.
With
Right.
FSD, you can take over like that. Even
Exactly.
if you're not sure, you can take over.
Yeah.
Like with your son, the best thing you can do is,
Oh
and
yeah.
that might cause an accident on its own.
Exactly. And so, and yeah, and I thought about the exact same thing. I'm like, I don't have the ability to just take over. I just have to
Yeah,
hope that he's
yeah,
he's doing a good job, and he's done so far. But yeah, that was my whole thought was that whole intervention thing, and when we look down the road, if it was all just self-driving cars on the road, totally safe. But the human element of the unknown, and you have no idea what a human driver is going to do, whereas you know exactly what FSD in the future, once it gets there, you know exactly what it's going to do. That's where it's going to get ugly for a little while.
well,
But
I
but
I
but
think
like,
that's
and I think the last time you and I spoke, it was about the fact that when it comes down to the decision making, FSD is going to make a decision better than a human more often than not. So
yeah.
even in the unknown circumstance with another human coming in, that FSD vehicle is going to make a better decision for the driver in that car and the passengers than another human would in most cases.
Yeah, I think even this year you'll start to see where it can anticipate what other people are going to do before they even do it. Right?
Man,
Like
now you're making me want to get a Tesla with FSD. Dang it.
yeah, trust me. Yeah,
End of
I've
this year. End of this
frequently,
year.
yeah.
We'll see.
Oh yeah, so you didn't take delivery, right? You pushed it off?
So now, for anybody who was on here who hasn't heard my story, I was supposed to take delivery. When the heck was it? I ordered it last November of 2021 because I ordered it for on my birthday, and it was a 1 year lead time. March rolled around, and I was like, you know what? Let me throw FSD on it. When I did that, it immediately bumped up my delivery date to that day, and I'm like, okay, I'm not ready yet. I just wanted to add FSD, so I took it off.
Mm.
I had to reconfigure it, and it pushed it off until October, and then it got delayed to November, then December, and then it was March of this year. Then we went through everything that was going on, ended up getting pulled up until November. So I could have taken it in November. I pushed it off. We got the EV tax credit information. And I'm like, well, I'm going to wait for the EV tax credit, but Tesla would not let me put it on hold a second time. So I was like, I can't take delivery. I'm going to have to cancel. They're like, okay. I figured it was gone. Then December rolls around, and they throw out to me and they say, "Hey, we're offering $3,750 off of your vehicle." I'm like, "But I thought mine was canceled." And like, "Nah, it's not canceled. We're going to let you keep your deposit on here and we're going to reopen it for you so you can buy it." I'm like, "Sweet." I took a look, still not financially wise for me to take it. Another 2 weeks go by. They offer the $7,500. And I was like, "Hey, can I use my original reservation?" They said, "No, you can't use your original reservation. You have to buy one out of inventory." Fine. I figured it was canceled. 2 weeks ago, or no, last week, they just sent me with the price cuts. They sent me a text and they said, "Hey, you want to take delivery now? Prices are low." Mine is still on hold. And so I saw the whole website was updated and I can remove hold and take delivery with my original purchase from November of 2021. But of course, the
Wow.
pricing is less than it was back then. This is wild how they just kept on holding this for me. So I can literally hold it, I guess, forever now. And I'll just take it
Yeah.
whenever I want.
Does that give you any concerns that they keep reaching out like that?
Yes and no. I mean, obviously, it gives me the sign of, hey, we're looking to sell these vehicles. We've got a lot that are out there. We're trying to move them. And I mean, you can see just from the inventory charts that are out there for the US, it spikes up real high. And then as soon as they drop the prices, it slams right back down. But if you pay attention, it kind of looks like it's hovering in that like 1,000 to 1,200 vehicle range for inventory. So I almost wonder if they're trying to balance it there because it came down to that and it's kind of leveled off. So who knows what they're going to do with pricing on that? So I wouldn't say it concerns me any more than a recession would. So it seems kind of typical, like we were talking about before, just recessionary cautions. That's it.
Yeah.
So
Yeah. Look, delivery wise, Tesla will, I think, without, no matter what, they'll do 50% year over year, I think.
yeah,
As long as they're not taking a loss on the vehicle. I
right.
think they will sell, even if it means making $0 on the vehicle. I think they'll still sell it. Why?
Yeah,
Because Elon said they would.
yeah,
So I'm not worried about that. What I'm worried about is the perception and the expectations for Tesla. And so to your point, I have the total new inventory up on my computer right now, and I'm looking at it. And the last 3 days looks like we've plateaued.
yeah.
The and this is why I say, it'll probably take a few weeks, maybe even a couple months to really understand if these price cuts are enough, if they're the final price cuts. It'll be to see how this pans out. If we start seeing this tick back up, that's going to be very interesting and fascinating yet concerning,
Yeah,
right?
and that was my thoughts, like, for when they cut them to 7,500 at the end of December, my impression was that they were doing that because they were trying to test to see what margins were gonna look like and what demand was gonna look like with that price cut, anticipating what we were going to be seeing with the EV tax credit. And so I had a feeling that's what they did that for, is that little 2-week test, and now they can kind of get a better gauge as to what the demand is gonna look like with different prices.
Yeah, yeah. No,
And
I
and now
agree
we're
with
getting it
that.
with the massive price cuts, and again, this to them, it's not like, I don't think they really truly know where it's gonna go in the future, but they have the pricing power to be able to adjust better than anyone else can to whatever comes their way.
Yeah, that's what's crazy, right? I mean, they make these massive drops, and even if margins drop down to 20%, that's still quadruple what the
I
next
know.
best player is doing. Like
Oh,
it's
exactly.
like
And, like, even if you look at their
there's
ICE vehicles, like, the very best, you're looking at, like, a 12% at vehicle margins. That's the very best.
what car
So
is that?
Tesla's still gonna be double what the best is.
Do you know which one that is? 12%.
God, I can't remember who it was. I was going through earnings, and this is last year, so it was just one quarter for somebody's earnings. I don't know if it was, maybe it was Toyota or VW. It was one of the bigger names. So it was
Mm.
Legacy Auto, and somebody had 12%. Maybe Honda, whoever it was. I think, isn't Honda a subsidiary of GM? I thought maybe. I can't remember.
Oh, I don't know. I know
Yeah, I think it was, yeah.
SAIC
So
is.
so Raymond here says Toyota. Yeah. So
Oh,
I knew that they were a little bit higher. So yeah, but that was it. So that was their average vehicle margin was 12%. And I'm like, okay. And Tesla being at double that on a bad time, like, okay.
yeah.
And not only that, but like, then you start factoring in EV adoption and us changing over all that and ICE vehicles not being worth as much. And then you look at everybody else's EVs who don't make any money at all. And if we're going to switch over to all EVs as we move over the decade, if nobody else is making money other than Tesla, everybody's going to go bankrupt. So what are they going to do? I don't even know.
Who do you think will be the first one to drop?
Oh man. Like there have been so many, and I don't even know if anybody's going to drop. I actually think it's going to be startups who will go first. And I think what's going to end up
Oh,
happening is we'll end up seeing, and I was contemplating it the other day, we'll either see a startup start to go under and file for bankruptcy. And I thought maybe a legacy auto would like buy them out. But legacy auto is already swamped with debt as it is. So if they bought them, especially with high interest rate environment, they'd be paying way too much for it anyway. So I don't know if we're going to see end up mergers going on. I think that might be the most reasonable is we might see a merger with like Rivian and Ford or something like that. So we may see something like that transpire if the year does play out in a deep recession. We'll probably see a merger with a couple of like a startup and legacy auto. And honestly, Ford and Rivian merging, I think I'd like to see that. That might not be a bad idea.
gotcha. Yeah, I think Stellantis goes under. I think they're
Yeah.
the most obvious one to go bankrupt. I agree with what you're saying about be a lot of startups, like like Lucid. I think is like the most obvious one right now.
I just wonder how
And
much Saudi Arabia would be willing to float Lucid by.
yeah, that's a good point. But if I mean, someone's got to buy the cars, and I
That
think
that's true, and we do know that they've been talking to Elon, and who knows, if they want to they've been talking about putting up a Tesla factory over there,
mm,
so
yeah,
maybe that happens, and they go with a Tesla route instead of Lucid, and Lucid goes bye bye.
yeah. I think GM and Ford will survive. Um, they're both doing right things. It's too bad they can't both be doing the same things the right way. Like I think
Right?
Jim Farley's doing the right things in the short term.
Yeah.
I think GM is trying to do the right things for the long term. Like what GM's doing, I think is they're trying to lay the groundwork, the foundation with the Ultium battery and coming up with all these different models and the skateboard. I'm not saying it's the right approach, but I think that's their intention is to, all right, we're not just going to try to get out the market first. We want to lay down this good foundation so that then we can leapfrog forward. I think that's what they're thinking. Where Ford's like, let's get a product out there now, sooner than later, and then we can iterate on it. And what I see happening is, and you're already starting to see it with Ford, is that the companies will split. You'll have the ICE Ford, and then you'll have the electric Ford. You'll have the
Yeah.
ICE GM, the electric GM, and eventually they'll spin those off. They'll make those companies their own thing. They'll be one company, but they'll be
Yeah.
separate. That way you
Right.
can
And
let one die and the other one survives, and all the
exactly. Like
debt goes with the legacy.
yeah, like Chevy, Buick, and how GM already does that as it is. Yeah, they'll,
Yeah,
they'll spin it off, and I'm actually so next year's gonna be big. So for you guys who don't know, 2024 as of right now is when Ford is going to start reporting on their EV numbers. So it'll be very interesting to see how those numbers come out.
they have a year to get profitable.
Yes.
Yeah,
Oh my
but
goodness.
and what I'm saying is not like well, it is hypothetical, but it's not like it's a crazy idea. Literally, just about every oil company has done this with some portion of them, from drilling companies out there to any drilling companies in the Chesapeake to deep Gulf of Mexico, rig companies like Nobles, Transoceans, right? Like Noble is a perfect example. Noble Drilling, they literally did this. They literally took all of their shallow rig assets, made that its own company. All the employees that work there, they spun that off. They essentially diluted them, and then they kept all of the deep sea drilling where all the money was, where all the BP and Shell contracts were. They kept all that, and eventually they just let that go into bankruptcy.
Yeah.
So
Yeah, when you
and
see
again,
a portion of your
yeah,
business dying, you just cut it off, let it die, and it saves you from a business perspective. That's just the smartest way to do it because then you're not having the same reason why we would never see like when there was all the talks of a year ago of Tesla, Elon making X corporation and putting all the companies under one umbrella. You don't want to do that because when you have one publicly traded company, three privately traded companies, three that aren't highly profitable yet, you would have, it would suck the life away from Tesla. And so that would be the complete opposite of what you would want to do. So obviously
Yeah.
those four companies, now five, are growing nicely, but you don't want to have that because, again, if you have something that's dying off, you want to cut that dead weight and let it go.
Yeah.
One last
Exactly.
question. Oh my gosh, we're going late here. So Slim here. Ford EV trucks will far outsell Tesla Cybertruck. What are your thoughts on that?
When? What's the time frame? That's my
What you got,
question
Slim? What's your
because
time frame on that? I mean, I would say let's say 2025, because at that point Cybertruck will be at volume production and probably close to where the ramp rate of the Lightning is.
what's Lightning at right now?
I do not know. 50. I think Jim Farley just said the other day. Mach E. I think was pushing up to 50,000 units. I thought that's what he had said.
Let's see. Let's see if I can find something real quick.
Because I know from my perspective, being in the construction field myself, it's going to come down to the functionality. I think guys are going to initially go with Ford because that's the tried and true truck that they've had, and I think they're going to do awesome with it. And I think what's going to end up starting the market is what we're already seeing now with the Lightning, and we're going to see these guys on the job sites. They're going to see how much better an EV truck is than their ICE truck. We're going to see that conversion come over. Cybertruck's going to drive onto a job site. It's going to turn everybody's heads, being, "What the hell is that thing?" And then they're going to start seeing the functionality of it. We clearly don't know what that true functionality is yet, but I think that will be the determining factor for how many of these things get sold.
Yeah. So I'm trying to see if I can find the Ford Lightning numbers. Ford F-150.
And don't forget, Slim, the other thing too is, as Raymond here pointed out, there's only 50,000 reservations for Ford. Meanwhile, the Cybertruck has 1.5 million. And even if you say out of that 1.5 million, let's say a third of them were people who just reserved like 5 Cybertrucks and they're not going to take all of them. You can, let's say there's a million, that's still significantly more. So Tesla's backed up on these through 2026 at the earliest, as far as we know.
So I'm looking at this here. If you look at from let's just, this is an old chart. It goes only up till September, so we're missing October, November, and December on this. But this has about an average of 2,000 vehicles a month, with September actually being a decent drop. But let's say there are 3,000 a month right now. So call it 36,000. Let's give it 50,000 at the end of this year. I would say, oh, we got numbers here. Ford
Yeah,
delivered
yeah,
37 in 2022. Plans to be building electric pickup trucks at a run rate of 150 by 2023. All right, yeah. So, I don't know if that's going to happen.
Okay. So for those of you guys who are just listening, Ford has delivered 13,258 F-150s in 2022. Company plans to build the electric pickup trucks to a run rate of 150,000 by the end of 2023. So that's their run rate. So, this isn't like they're going to do 150,000 in 2023. It's just the run rate by the end of the year is what their plan is.
Yeah. All right. So then my prediction, just a prediction, would be Ford does not get anywhere near the 150, and that Tesla, I could see. I bet you Ford goes to maybe 40 to 50,000 this year. I bet you Tesla, assuming Cybertruck comes out or starts delivering before Q3, so in Q2, which probably won't happen. I bet deliveries start sometime in Q4. Like, if you just imagine things coming up. So imagine Q4, we start deliveries. Maybe they can deliver 5,000 this year. And then in 2023, maybe 2025. Maybe 2025 is when Tesla would outsell. Give them a solid year of a good ramping up. And I think that's fairly conservative, to be honest.
Yeah. I mean, looking at the Ford deliveries for 2022, I can actually picture that being the Cybertruck deliveries for 2023. I think that's a realistic number that we might see this year. And then next year, and who knows how quickly they're going to build them. I mean, there's so many discrepancies between, is it going to be so much more complex that they can't build them as fast? Or have they set this all up intentionally to build extremely fast? So
Agreed.
we obviously don't know.
But Yeah, I 100% agree. But I'll leave you in the same context with one last conspiracy theory of mine. All right, and again, this is just you have a drink at night, start doing some thinking, you come up with ideas or thoughts. So one of the things I was thinking about was Tesla was headquartered in California, and essentially Tesla needed to be in the right environment for the sustainability play, if you will, right? For people to want to invest and to get excited about that. And what better place than Silicon Valley, San Fran, California, etc. It's made for that. Then Tesla essentially really had all of the people who really believe in sustainability, who are just very diehard about it. People who just identify with that type of politics and all that. They love Tesla. They loved Elon. They love the mission. They're all about it. It aligns with their ethos and everything. But at that point, that would be like no different than only creating a product that only 50% of the population can purchase, right? So it'd be like making something and only men can buy it, but it's pointless for women. Well, you're literally missing a huge part of the market.
Yeah.
So then what happens? Well, Elon moves headquarters to Texas, and Elon gets controversial to a lot of people. I like to think he's being more, centered minded, but the point is he's appealing towards that demographic that hasn't want to touch any of this green tree hugging, whatever. And now Elon's there in Texas having cyber rodeo, gonna build this truck, and it's almost like this genius next level plan where now he's there. He's appealing to the things they care about. Truck built here in Texas. Like, where else would you build a Cybertruck to like? It's not gonna be in Detroit. I'm sorry. The biggest truck markets are in Texas and California, and like it just seems like this amazing chess game that's happening
Oh, I
right
know.
before our eyes, and Elon's just doing it. And maybe it's just a coincidence or just things are happening organically. But when you're slightly, a couple drinks in and you start thinking about this and you're like, holy cow,
Well, I mean, it
what are
makes
the
sense
odds?
because, I mean, here he is. He's now in oil country, converting oil country to EV country. I had one of my
Yeah.
subscribers tell me that they live in Oklahoma and they're seeing Teslas everywhere in Oklahoma.
And that's oil country too.
Yeah. So, well,
Yeah.
that's an awesome thought to end on. Nick, thank you so much for being on. 2 hours. That's my longest live stream so far. So thank you.
Hey.
We've been kicking off this new year very well. Awesome 7% day. I got to go back and see how the stock performed the last time you were on here. See if we did just as well. So if you guys don't follow him, check out his channel on Investing Against the Grain. Definitely subscribe to him. Great stuff over there. Anything else you want to share, Nick?
Yeah, I just want to say thank you. I appreciate you having me on. It's always a joy to do these with you, and to everybody. Once again, we are both Tesla bulls. I'm just slightly bearish on the economy at the moment, but long term, I think it's brighter than ever. I think it's a no-brainer from here moving forward. So yeah, thank you again. I appreciate it, and thank you to your audience. They're all amazing.
Awesome. Thank you guys, and we'll see you in the next one.